What's up, guys? Bulls and the Bears here with the midweek update video with our wheel strategy portfolio. The account sits nicely at 23,686, 639, and this week's been pretty flat. I mean, nothing has really gone on this week. Everything that I have open was open last week, and now I'm just waiting for it to play out because they all expire this Friday. And there really hasn't been any need to make any adjustments. I haven't really opened any new positions except one, which was literally an hour ago, and that was with RIOT. Other than that, everything's the same. And if I go to the 1 week look and look at the start of this week, which is right here, June 3rd, it's just been flat. I mean, June 3rd was 23,500, June 4th, 23,600, and then today, 23,600. So just not a lot going on. But it's still at a good elevated market value, because if I go to the 1 year look, you can see we're pretty much at all-time highs right now. So that's a fine area to stay flat. I'm okay with that. So that's cool. We'll take a look at these positions here just to refresh you guys. So I have share positions and I have a couple leaps. So 200 shares of SOFI, that's down a little bit. It's been struggling, unfortunately. Match group, down with 100 shares, but it's been coming up. I was down about $400, now down only $245. You can see that little spark line chart. It is increasing, so we'll take a look at that. Comcast down $100. That rallied nicely last week, kind of pulling back a little bit this week, but still not at a terrible spot. And then the leaps. So Nike, by Nike Leap, is now down $18, so it's right around that break-even area. I want it to go higher. But it's at a decent spot. My McDonald's leap, though, hello, up $645. Let's go with that. McDonald's has been rallying nicely. I do have a covered call against it, though, which is offsetting a lot of that gain. It's down $300, so net them together, it's only plus 300 or so. I have a Nike covered call too against my leap. That's up $14. Comcast covered calls up $12 or 50%. And then the RIOT cash secured put. This was the new position today. Sold that at the 850 strike, as RIOT has been selling off today. It's down like over 5%. Again, we're going to take a look at all the charts and trading view. But I found an opportunity there. I've been watching RIOT, attempting selling puts at 9, keeping my eye on it. Now I'm able to sell a put at 850. I mean, I was interested in getting in at 9. Now I'm trying to get in at 850. That's even better for me. Just one put, small $850 starter position. We'll see if I get assigned, but that's what I got going on. I still have 5,400 in buying power, which is basically cash. So that's great. I mean, that's about a quarter of my account just sitting in cash, even with that new RIOT position. So I feel pretty good about that. I like having that dry powder on the sidelines in case a big opportunity shows up, or if SOFI sells off more and I load more into that position. But so that's the status of the account. Let's take a look at the finer details, going to the trading view and look at some of these charts. Here's the S&P 500, SPY. Looks like we are heading back to all-time highs. Almost there. This would be the all-time closing high if it stays up here today. So that's pretty impressive. Up 0.74% right now. My positions aren't necessarily having a great time, though. Only 2 of them are up, even on this up day in the market. We're going to start with McDonald's, which is down, but overall doing pretty damn good, all things considered. Yesterday I got as high as 263, today pulling back to 261. If we go down to the 30-minute, I can explain the situation here. So if you may recall, I bought the leap, and that was right around here. When McDonald's was at 255 about is where I bought the leap, and that was on May 28th when it was just falling down, and it fell further after that. So my leap was down like $500 within 24 hours because it just kept falling. But I bought the leap here because it was in a nice demand zone, nice support area, and sure enough, McDonald's found support. It found buyers. And over the next couple days after that drop where I was down 500, it started coming back up. I had sold a covered call at 255, which is right about where I bought the leap. And that was, I had that sold off expiring last Friday. But as McDonald's was rallying, I ended up rolling it out to this week and up to 257. So now you see that up here. I have a 257.50 covered call sold for this Friday for a net credit of 67 cents. And this week, which started here, has been pretty good. We're pulling back a little bit today, but still maintaining these nice prices. My covered call is still in the money, but that's okay. So let's think about this for a second. So I basically got the leap opened when McDonald's at 255, and the delta is 1. It's a really deep in the money call that I bought. So it's mimicking 100 shares. So if I bought 100 shares at 255 and my covered call is sold at 257.50, I stand to make $250 on the synthetic shares, right? If I buy at 255 and then sell at 257.50, which is where my covered call is, that's where I'm saying I would sell shares, then that's my total upside on the leap is 250. So that's what I stand to gain. So although the leap itself is up like 600 bucks, I really only stand to gain 250 on the leap plus any of the premium collected on the covered calls, which in this case is a net credit of 67 bucks. That's again if this ends up staying in the money, in which case I would close the covered call separately and then sell the leap separately. You don't want to take assignment. I made a video on that recently. You can check it out. TJ the Wheel Deal covered it recently. You can check it out. But that's just the nature of the game. So if we go back to Robinhood, I can kind of show you. So the leap here up 575, the covered call is down 275. That's a net difference of 300 bucks, which would be the $250 of leap upside plus the credit received on the covered call premium. So that kind of makes sense. That's more or less what I would expect to see, but I'm going to wait until Friday to do anything about it regardless, because if we go into the covered call, we got to understand that there's still time value left on the call contract. And as option sellers, all we stand to make is time value. That's what we sell. That's what theta eats at. And that's what makes us profit is the time value. So if we look at the covered call right here, it's worth 380. Looks like McDonald's is at 260 bucks and 62 cents, which puts this covered call about $3, just about perfectly $3 in the money, right? 257.50 versus 260.50, more or less, right? $3 in the money. So that means $3 of this option price is the intrinsic value, is the in the money portion of the covered call. So $3 is intrinsic value, which leaves 83 cents left over. That tells me that there's 83 cents worth of time value still on the contract. That's a lot. I only have a net credit of 60, what was it, 62? 67. I have a net credit of 67 cents collected in time value, but this contract says it has 83 cents worth of time value. So buying it back now, I'd actually be losing out on all the time value I collected and then some. So I want the time value to be very low, close to zero, or at the very least below what I collected of 67 cents. Right now it's at 83 cents, and that's not good. By Friday, no matter how in the money this contract is, by Friday, end of day, the time value should be very low, and that is when I would look to buy back the call. It might still be expensive. It might still be worth $3-4 bucks because it's in the money, but any dollar, any cent in the money that the call is going to be completely offset by the leap. Because if the covered call, I mean, they're both call contracts. So if the covered call increases by $1, then my long call should also increase by $1. They're both call contracts. They're both going to go up the same way as McDonald's goes up. So they're both going to offset each other. All I really care about is the time value. And right now it's just too expensive. So it would not behoove me to close it right now. I'd rather wait until Friday where that time value decays. But who knows? It's only Wednesday. McDonald's is having a little bit of a red day now. If it gets lower Thursday and Friday, I might end up having this call expire worthless. Or if it stays close to my covered call, I might roll it. Again, roll it out to next week and up to 260, giving myself more upside. I mean, McDonald's is a pretty solid company. It looks like I got a pretty good deal. I'm confident with it. If I could just keep riding it up, selling those covered calls out and up and just keep riding the stock up higher and higher. Next week, 260. The week after that, 262.50. The week after that, 265. Maybe I could really get this leap going up towards 270, in which case I'd make $1,500 on the leap, plus all the covered call premium to that point. So that would be a nice proposition. So it's all about the conviction that I have in the stock and the price that I got it at to try to hold it for that long, you know. If I wasn't so convicted in the trade, I might say, hey, this is a nice pop. I'm just going to take it because it could roll over again. If I really feel confident in it, then that's going to allow me to hold it longer to see if it can get higher. And with this position, I actually feel like doing that. But that's going to be dependent on how far in the money my covered call is by Friday. So we'll see what happens there. The other leap position is Nike. Nike is having a red day today, down 50 cents about. So I have the leap here. I bought it around $93.64, but that was a while ago. That was like 2 months ago now. I did that way over here, right after its earnings drop, and it's about to have earnings soon. So it's almost been a full quarter of me owning this thing. So as a result, Theta has been working on this for the past couple of months, which means I need it to be quite a bit higher than where I got it now. Usually when you buy the leap immediately, like right away, as soon as the stock goes up from where you bought it, you're going to be profitable. But over time, Theta is going to constantly eat away at the value of your contract, and you're going to need the stock to get higher and higher and higher to maintain that same level of profit. And since I've been in this for like 2.5 months, I need it to get I need it to be around like 94.50 or so before my leap is profitable. I mean, you saw it over here. My Nike leap is down $23. It's down $23, even though Nike is about 60 cents above where I bought it. I bought the leap 60 cents ago. But because Theta's been eating at it, the contract's been withering away a little bit, and now even though we're higher, it's actually still at a loss. So I needed to get higher than this. I have a covered call sold at 95. At that point, it definitely will be profitable. I mean, I saw over here and even over here, my Nike leap was profitable at 95. So if I do have to, you know, end the trade at the 95 strike with my covered call being there, then it should still be a profitable campaign with this leap. I collected a net credit of 62 cents right here because just like McDonald's, I had sold a covered call expiring last week. In this case, it was a 94 strike, and then I rolled it out to this week. I rolled it out to this Friday and up to the 95 strike because last week Nike was pushing 94 pretty strongly. When it broke out right here of this triangle on last Thursday, when it broke out, it was having a really strong day, up over 93.50. It was getting close to my 94 covered call. I decided to roll it out and up because I knew that the 94 level wasn't gonna make my leap profitable. I needed to get higher than that. So I took that opportunity to roll it out and up to 95, which would be a profitable level for my leap, and we'll see. But right now it's out of the money. It's out of the money. My Nike's at 94.26. Still have a couple days left, but hey, this could expire worthless, and then we're good. I'm able to sell more calls after that. Or I could roll it again. You know, if Nike stays right here over $94, I should easily be able to sell the 96 strike for solid premium. So whether that means I roll it or just let this expire and then sell a new one next week, I should be able to get the 96 strike very, very easily for good premium, as long as Nike stays where it is. If it really sells off these next couple of days, then that might get a little harder to do. But overall, I like where it's at. Next, we'll go to SOFI quick. I say quickly because there's nothing going on here. It's just been stuck in this $6.75 to $6.90 range, $7 range this past couple of weeks, slowly downtrending. I have 200 shares at $7.25, which means I have to sell calls at $7.50 if I want it to be above my cost basis. And it's just too far away for that. There's no premium to be had up there. The other thing I could do, which is what I'm looking to do, is sell puts at $6.50. because I don't have a full position yet. I'm looking to get like 5, 6, maybe 700 shares of SOFI. I only have 200, so I still have more building to do, which means I have more puts to sell. I'm looking at the 650 level to be my next area for cash secured puts, and even that is too far away to collect premium that I'm happy with. I want to get like at least 5 cents. Yesterday, when it was kind of down a little bit, down towards 670, it was only paying like 2 to 3 cents. That was a bid ask, 2 cents by 3 cents. I'm not happy with that. Maybe I'll take 4, but I'd like at least 5. And it just wasn't paying, so there was nothing to do with SOFI. We're just waiting patiently. We'll also look at Match Group quick because, again, not doing anything here. It's just too far out of the money. I have 100 shares at 34, and it's too far down for me to sell calls. Thankfully, though, it has been rallying. This is a streak of 6 green days, basically, which is great. I like to see that because it was scaring me down here when it was selling off down to 29 again. I had this big earnings drop down to 27-ish. Came back up, filled the gap, started to come back down, which was scaring me. But thankfully, it's been rallying again, but it has a lot more room to go. So not gonna celebrate just yet. And unfortunately, not able to make any moves on it. This has been a dead position for about a month now, unfortunately. Comcast. This one has been kind of struggling too, like Match, but it's been giving me opportunities to sell calls. I have 100 shares at 40.50, and as you can see, it hasn't hit 40.50 in a while. It dropped after earnings, just like Match did in April, and it's been under my cost basis ever since. But there have been times where it's been giving me opportunities to sell calls at $40. I had an opportunity here, I think here as well, and then on this rally too. So even though it's been underwater and kind of struggling, I have had several opportunities to sell calls on it. Although I will say they're below my cost basis. My basis is at 40.50 and I've been selling calls at 40, one strike below. And I've been saying that I'm willing to do this because I acknowledge that Comcast has kind of been weak, so I'm just trying to take advantage by selling aggressive calls, knowing that there's probably a good chance it won't continue to rally above it. And even if it does, I have the confidence that I'll be able to roll it up just one more strike. That's all, one more strike, and then I'll be right where I need to be at my break even. So I'm not really too worried about that. It's been pulling back, unfortunately. It was right at, it closed on Friday right at my strike, right at $40, which is a hell of a good close. I was very happy about that, but it's been pulling back ever since. Now it's at $39.37. Still could come back up. I'm hoping it doesn't fall too much more than that. I want it to maintain this recent strength in the 39s and 40 area. My covered call is out of the money. It's profitable, up 50% right now, but I'm going to ride this thing out a little bit. I'm not going to close it unless I get like 80 to 90% of the premium locked up. Right now, it's only 50%, so I'm still going to let it work. Next, we'll move on to RIOT, which is what I mentioned earlier in the video. It's a new position where I sold a cash secured put. So this is something I've been interested in recently. You know, looking at this support over the last year or so, around $9. It can go lower than that. That's why I'm only taking a starter position. I'm completely aware that it could drop down to $5 or $6, so I'm only taking a starter here at support at a level that I think it could possibly stay supported at, and then go up to like $12. So I don't really want to miss out on that. So I'm trying to get a starter position here. If the support does fail, I'll look to build more of a position down around $7, $6, $5. We'll see. I think it'll be a good growthy position to have. This is a nice position that could really add a lot of performance and growth into the account. I mean, something like this can easily double. You know, having a name in your account that can double is pretty advantageous. Nike's not going to double. Comcast, Match, McDonald's are not going to double. Maybe Comcast and Match could over many years, but like definitely not Nike or McDonald's. That would take a really long time to happen if it does happen. But something like RIOT, I mean, it's doubled like 3 times in the last year. Like these huge spikes are doubles. I mean, from 9 to 18, back down to 9, up to 18. Now it's back down to 9 again. Like if I can get something like that happens within a couple months, that's really good for the account. Obviously, it's risky. That's why I'm taking it slow. But I think, you know, Bitcoin's ability to have dropped as far as it did after it hit that massive 60,000, 70,000 area, dropping all the way down to 15. Like, I was skeptical of this move, right? I was like, okay, it's having a mania, it's having its time in the sun, right? And now it's coming all the way back down. Like, yeah, that's what I thought. Like, Bitcoin is just going to come all the way back down, all the fun's over, and we're down to 15,000 again. Only to probably get worse, right? Well, no, it came back up to make all-time highs. So that, to me, was very telling that maybe Bitcoin really is that legit. For it to have this mania, come all the way down, and then go back up to a new high, that's saying something. That's saying that this over here probably wasn't just a fad, right? And obviously more institutions are getting into it. There's ETFs now, all that stuff. So why not take a stab in this space? I'm willing to try it out. I'm not going to go out and buy Bitcoin individually and hold it in a wallet or anything, but I'm willing to take a stab on a miner in the short term. So we'll see what happens. I took this dip today, which is down almost 7%. I took advantage of this dip to sell a put at 850 for this Friday. So it expires in literally 2 days. And I got 15 cents for it, which is very nice. So that'll be a really nice cash grab for this kind of a turnaround. I mean, just a 2-day trade for 15 cents on 850 bucks. That's a really good credit there. We'll see what happens. It's at 902 right now. We still have 2 days left. It could very well hold support at 9, and then this expires worthless, which I'm fine with too. So I'm not going to cry if I don't get assigned and own shares, but it would also be cool to own shares as well. So either way, I'm happy. I got a nice credit, so all I have to do now is just wait, set it and forget it, basically. And the last thing we'll talk about is Palantir. This one I took a stab at as well. I've been saying that I would like to get into this thing, but way down here, 15, 16, you know, this nice area of support. But it's been holding up in at the 20s. I can't deny it. Cannot deny the support it's been having at 20. It seems like a really good company. I want it lower because the PE ratio is so high. It seems so overvalued, but these investors might just like it that way, and it might just stay overvalued for a while. And then when earnings catch up, the price is only going to move higher from here. So I'm looking to see if I can get a starter position at this $20 area. And then if it does dip down to a price that I want it, around 16, 17, I'll get my full position down there. But I'll take a starter at 20.50. I was willing to do it. So I sold a put for 14 cents at 20.50. But then it rallied yesterday over 3%. I ended up closing the put for 3 cents. So I profited $11 on that. And now the trade's over. And I'm just waiting to see if it comes back down. But it's having another green day today. So gonna have to wait a little bit longer on Palantir to see if it gives me another opportunity. If not, then oh well, I guess I missed out. That does it for the update, guys. So far this week is shaping up to be a pretty good one. I've already realized $11 profit with that Palantir put, closing that early. And then everything else I have open. The covered calls on Comcast, McDonald's, Nike, the RIOT cash secured put, all that amounts to $168 in collected premium. I might not realize all of it if I buy some of it back early, but that's what I stand to gain. That's my potential, at least, for this week. And I'm thrilled about that. That's a great start to the month of June. But we still have a couple more days left of the week, so we'll see what ends up actually happening. I will come back to you guys with the weekly recap to see exactly how everything unfolded. Until then, guys, thank you for watching. If you enjoyed, hit the like button, subscribe for more content, and I'll see you all next time.